$42,000. That's pretty good. So you can see the SPIAs. Hey, John Stevenson here, the Guaranteed Retirement Guy, and I want to talk to you about SPIAs and compare them to fixed index annuities. Which one pays the most? All right, so I have a lot of people that reach out to me and they ask, does a SPIA pay me more? Sometimes, just depends. Do you want control of your money? I guess that's the question you should ask yourself. I know that when you're looking for annuities, you're looking for the most income possible, and there is a preconceived notion that SPIAs pay a whole lot more because you're giving up control of your money. Because essentially with a SPIA, you're funding an annuity, and it gives you guaranteed income for life. And then sometimes you can add like a cash refund. And also there are options for a period certain, like 10, 20, maybe even 30 years, where it will continue to pay out to your beneficiaries if you pass away too early. So there are benefits to SPIAs, but most of the time, if you're looking for a large amount of income, and if you're looking for some flexibility, typically a fixed index annuity will do the trick. But don't take my word for it. Let's take a look and we'll compare them. So you'll notice that I am sharing my screen and I am looking at the SPIA calculator, all right? The single premium immediate annuity or deferred immediate annuity. Okay, and I'm basing this off of me and my wife. So, and I'm just, make believe here. We're both 65 years old. And I'm going to look at a couple different things. So I'm going to do a certain period, and I want to do like 17 years. Okay, I'm putting $500,000 in, and let's see here. I'm going to start income in about 3 weeks. Okay, so let's take a look at this, see exactly what that would give us. All right, so you can see the monthly income. The highest one is American National Insurance Company, great company. Then you got Symetra, and then you got Nationwide, and then EquiTrust. They're all pretty good. And you'll notice that the highest monthly income is $26.85 a month. That's $32,000 a year in income. That's not bad. I can start that immediately. It's going to go for life. And if I die and my wife dies before the 17 years is over, it's going to pay those payments. It's going to continue those payments, to our kids or whoever our beneficiaries is. Let's look at the cash refund. Okay, so everything else is the same. It's still a joint life for both of us. All right, so it's 26. Yeah, it's not a big change. So $26.15 a month. That's $31,380 per year in guaranteed income for the rest of your life. And of course, if you don't use all of the $500,000, whatever is left, of course, gets distributed to your beneficiaries. So if you take $31,000 a year, and that's, let's say, times 25 years, we're still going to take out $784,000 in income. So that's not bad. Now, is that as good as a fixed index annuity? Well, let's take a look. And I want to see guaranteed income that cannot go down. So let's take a look at that. We're going to do the same $500,000. Okay, we're both still 65, and we're taking immediate income. So we're taking it in 1 month from now. Now, the only difference is it's not a SPIA. We're not giving up control of our money. Now we're putting it in a fixed index annuity contract. It's tied to an index. When the market goes up or the index goes up, you make money. Your account grows. If the market goes down, then you don't lose a dime because it's not actually in the market, which is the wonderful thing about index annuities. They follow the index, but they do not realize any losses if the index actually goes down. Again, we want guaranteed income for life. This is joint. Let's take a look. Okay, you'll notice that the highest is Nationwide. Not bad. A+ rated company. They've been around, I believe, since 1926. And $35,700. That is roughly, $3,000 more per year than the SPIA that we were looking at before, the highest SPIA. That's pretty good. And it gives you control, which means, let's say you decide in 3 or 4 years after taking income, you know what, I want to take my money out. I want to take whatever's left. I want to take it out. It's my money. You can do that. The nice thing about these is, let's say you decide, you know what, I don't want I don't want to take income now. I want to take income in a year because I don't really need it right now. So I want to have, I want to have the chance to have more income later on. All right, well, Nationwide is now paying us $38,556. That's pretty good for waiting a year. Wow. Okay, let's go into, let's say, a 2-year deferral. Wow, SPIA is paying $42,000 per year, guaranteed the rest of our life. Let's take a look at this. Let's go into, so you notice here, and they give you 2 scenarios, and I always show this in my videos, but you notice that there's an account value that goes down rather quickly because it's showing no growth whatsoever. This is showing worst case scenario. It's a very extreme example, but it's still important to show that, hey, if your account value goes down very quickly, well, you'll lose your account value, but your income continues the rest of your life, which is pretty cool. If you take this out till you're 94 years old, you've taken out almost $1.2 million in guaranteed income. Not bad. All right, and then they show you hypothetical, which is ridiculous. They got some big years, what, 22%, 14%? Yeah, maybe, but most likely not. But still, even with better growth, you notice that the account value does go down still. It just takes longer. So by the time you're 86, it's zeroed out. Now, of course, the income continues for life. And I'm just showing this to 94. If you live to 104 or 114, it will keep paying. But here's what I want to talk about as far as flexibility. Let's say let's say I put money in here and I take income. I'm 67 years old, I'm taking income. And let's say I take it till I'm 73, okay? 73 years old, and I get terminally ill, and I'm like, you know what? We've got enough money coming in from other sources. The income's good. I want to take this money out and use it for other purposes. I've changed my mind. Well, you can see at this point, there's about $466,000. Now, we're not quite through our 10-year surrender period, right? Those are the downsides of annuities. So you notice I can't take 466 out. I can only take 457, okay? Well, that's not too bad. Obviously, if I wait a little bit longer, then you'll notice year 11, 435,000, 435,000. Of course, this is based off of, current growth projections, which some of those are a little high. So keep that in mind. But that's the thing with a fixed index annuity. It kind of gives you really the best of everything. Okay, it gives you lots of guaranteed income, and you notice here is giving you a lot more guaranteed income than the SPIA ever was. Okay, that's pretty good. In fact, let's go in here and let's test this out a little bit. All right, so we know it's going to give us $42,000 a year. Okay, let's go back to the SPIA, and we're going to compare that. Okay, so let's look at what it would do in 2 years. Okay, so we're going to take income. I know I want to take income. All right, 2026. All right, so I've waited 2 years, and now I'm getting monthly income of $3,500 a month. 42,000. That's pretty good. So you can see the SPIAs, if they are deferred, do better. So they do better than the immediate ones. You notice that it is almost neck and neck with a SPIAs. But here's the difference. You don't have control like you do over a fixed index annuity. Okay, what if you decide you don't want to take income? The nice thing is it'll just keep growing. If you want control, you want flexibility, you should consider a fixed index annuity that gives you guaranteed income. And if you want, just a solid guarantee of, hey, you know what? Maybe you're single and you've got a kid that's still at home and you're worried about them. Maybe you're a little bit older and they're a lot younger. Then a lot of times, maybe that might work. Where if you're thinking, I want them to have income for at least this amount of years, if I were to pass away early, then that might be a situation where a SPIA might be appropriate. All right, appreciate you watching the video, and please subscribe. Make sure you like, and if you need anything, if you want to book a call, you'll notice there is a link below this video. And if you want to get in my calendar, we can go over your specific situation. If you're looking for immediate income, if you're looking for deferred income, we'll look at all the carriers. We'll look at which ones are the best for you. All right, sound good? All right, thanks again, and we will see you in the next video. Like the video content? Please share your thoughts on the comment tab. Would love to hear from you and answer any questions that you have.